You're listening to Witham's Taxing Topics. When it rains, it pours. Tax regulations and guidance are dynamic, continually changing domestic and international financial waters. Step under Witham's umbrella to better weather the storms of trending taxing topics. We'll share the essential news and information you need to prepare for what's ahead.
Hi, everyone. Thank you for tuning in to our podcast episode today on the Child Tax Care Credit, as we will be discussing the changes made under the American Rescue Plan Act. My name is Maria Carvalho, and I'm a senior tax accountant specializing in the PCS niche. I specialize in high net worth individuals, gifts, trusts, and estates. With me today discussing the Child Tax Care Credit is Rebecca.
Thanks, Maria. I'm Rebecca Alicea, and I'm a tax manager also on our PCS practice, specializing in high net worth individuals, gifts, trusts, and estates. As Maria and I can attest to, the 2021 tax filing season is already underway, and clients are seeing the impact of recent legislation on their 2021 tax returns. Under the American Rescue Plan Act, which was signed into law in March of last year, changes were made to the child tax credit. This credit is the topic of our podcast today.
So before we dive deeper into the changes of the child tax credit, what is the difference between a deduction and a credit, Rebecca?
That's a good question, Maria, and we get this asked to us a lot from our clients. While tax deduction and a tax credit both reduce the amount of tax, each do so in two separate ways. A deduction will reduce an individual's amount of income that will be subject to tax. Think of your standard deduction or itemized deductions such as mortgage interest or charitable contributions. These deductions will reduce an individual's income, and then that income, which we call taxable income, is what we use to determine how much tax is due for the year. Whereas a credit will reduce the amount of the tax liability owed, giving the individual a dollar for dollar reduction in their tax liability.
So I guess we can say, although both the deduction and credit benefit you, a tax credit can be considered more beneficial.
That's correct. And one of those credits, which we're speaking on today, the child tax credit, is a fully refundable tax credit for families with qualifying children. It is determined primarily by a taxpayer's income level, marital status, and number of dependent children. Maria, would you mind giving our listeners some specifics on the child tax credit and how the American Rescue Plan has changed it?
Absolutely, Rebecca. So in 2020, taxpayers were eligible to receive a $2,000 credit per child under the Child Tax Care Credit. However, now this year, due to the American Rescue Plan, eligible taxpayers can now receive $3,600 for each child under the age of 6 and $3,000 per child from ages 6 to 17 years old. That is a $1,000 to $1,600 jump per child. In addition, the American Rescue Plan rolled out a new feature of advance payments. From July 2021 to December of 2021, taxpayers had the opportunity to receive direct advance payments of their child's credits. These payments were in the amounts of $250 or $300, depending on the age of the qualifying child. The objective of advance payments was to provide relief to American families throughout the year so they do not need to wait to receive their credit when they file their tax return in April. So I'm sure many of you may be thinking, am I eligible to receive this great credit? And Rebecca can break it down for you if you are.
So to be eligible for the child tax credit on your 2021 tax return, first and foremost, you must have a qualifying child who stayed with you for more than 6 months. So unfortunately for all of us out there with many fur babies, they do not count as a qualifying child, even though we treat them as our own children. And it's also very important to note that the credit is actually subject to a phase out based off your filing status and income level, which is similar to prior years. As Maria previously mentioned, During July and December of 2021, there were advance payments of the child tax credit that took place. The IRS had calculated a taxpayer's potential eligible credit based on their 2019 or 2020 return. If you did receive advance payments, you should have received or will be receiving a letter from the IRS labeled Letter 6419. This letter will indicate the total payments that you received during the year, and it will be necessary to provide that form to your tax preparer for them to determine your remaining credit available to take on your 2021 1040. If you have not received this letter, you can go to the IRS website to create an account and obtain the information you need.
And if you are not too sure on how to create an account, your accountant can help and show you what steps to take. So I'm sure a common thought for many may be, since that I've received advance payments, do I pick up the full $3,600 or $3,000 credit on my tax return, assuming one dependent? And there are different answers to this question. If you did not receive advance payments and dependent upon your income or your child's age, you may be eligible to receive the full $3,600 or $3,000 credit. If you did receive advance payments, your accountant will reconcile the difference between the payments listed on Form 6419 or from your online account statement with the maximum eligible credit. That difference will be the credit you take on your 1040. So it's very important to have record of your advance payments received to determine the credit you'll be taking on your 1040. And so now, what happens if I were to receive advance payments from the IRS and they were greater than the child tax credit amount? Am I allowed to take this on my 2021 tax return, Rebecca?
As you mentioned, Maria, you can't double dip on the credit. So if you received advance payments during 2021, but the amount you are entitled to based on your 1040 filing for the year is less, which could be potentially due to a change in your filing status, your income level, or the amount of qualified dependents that you're reporting on your 2021 return versus what the IRS utilized when calculating the advance credits for you, it is possible that you may owe an additional tax. However, the IRS has created a safe harbor where any additional tax as a result of advance payments you receive being higher than the amount of credit you're permitted to take on your 2021 filing, this safe harbor will help reduce or potentially even qualify you from repayment protection. Since this is a facts and circumstances test and will vary from client to client, it's very important that you get your information to your preparer as early as possible so they can determine this calculation for you.
Now is the time to get your information to your accountant to determine if you are close to the income threshold and if there are still some additional steps to match the credit, or if you received more credit than what you were entitled to, as Rebecca just mentioned. Your accountant can help you determine next steps to take. For example, if you are close to the income threshold, a Schedule C taxpayer can contribute to their IRA to reduce their AGI and maximize their potential credit. This is still a prominent conversation point in Congress, hoping to keep the advance payments going. Being a hot topic amongst Congress, WITHM is continuing to monitor the implications in tax law that will impact our clients now and in the future.
We really would like to thank everybody for tuning in today, and we hope you have found this podcast informative. Please reach out to your WITHM tax professional, and if you have any questions, Maria and I are always happy to be of assistance.
Thank you for listening in, and as Rebecca said, please feel free to reach out to your WITHM preparer or Rebecca and I for any questions you may have.
Thank you.
You've been listening to WITHM's Taxing Topics. Contact us with your feedback or suggestions for future podcast topics. Visit www.withm.com for additional information. Send an email to info@withm.com or follow us on Facebook, Instagram, or Twitter @WITHMCPA. Thank you for listening.